So February 28th, when I look at Tesla, what do I see? I see it hitting the lower Bollinger Band. And when it hits the lower Bollinger Band for a day or two, I mean, look at this. Boom, 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 boom. What does it normally do? When you start to see a bit of a reversal on the Bollinger, from the Bollinger Band, and it gets oversold on the RSI, typically, and the cycle oscillator is at a low, typically you will see a little bounce in Tesla, an oversold bounce. Now, am I looking for it to go to 400? No, I'm just looking to see a bounce. And so look at the bounce. Whoop, there it goes. So that's what I was looking to play. So here we are again, oversold at the lower Bollinger Band and starting to get a little bit of a bounce. So right here at this moment in time, I place a trade. And I did a number of them. I did some in Legacy and I did some here. But let's just look at the ones that, I'll look at one in particular. The 287 half by 292 half call debit spread, right? It's 5 wide. So we buy the 287 half call, sell the 292 half above it, and that's creating a call debit spread. Now, what happened? Well, yesterday, price went up. Exactly what we wanted. It went up so much that I decided to sell some of it. But I know this market and I know the VIX is rising. So I know there's the potential for this to drop. So we hit our target, didn't we? The top target was 292 half. Well, 292 half is like around here. So we've more than breached our target, but there's the possibility that it pulls back. So I had, just to give you an example, I had 3 contracts on this particular spread. So I sold one of them, I think 320. Is that what I did? I had other ones in Legacy, but I think that's what I did. Hold on. I alerted this on March 3rd. Tesla trades are all up about 60%. Normally good to keep going and adding, but 300 is a psychological level. Look at 300 and look at where it stops. Everybody look. Right? Yesterday, came up to 300, a little above, and dropped from there. I'm using it as my first target, scaling out with a nice profit. If you took the 287 half, you could sell it here for 320, or you can convert it to a fly by adding the 292 half by 297 half. So now what happens if I do a call credit spread? I sell this call and buy this one and see how much credit I could get. Well, I was able to get a $275 credit for this call credit spread. This is a CDS, this is a CCS, called credit spread. So I want you to just, think of the math, because that's the easiest way to do it. This trade here, the 287 half by 292 half trade, it cost $2. And it's still open. I still have it. And then I put this trade on top of it, where I got 275 for it, minus 275. So what's the difference between $2 and 275? 75 bucks. So I just made $75. And because the trade is still open, look what I've just created. I got one of these, 287 half. I have 2 of these short the 292 half, and one of these, the 297 half. I don't know what's going on here. Anyway, so what I end up with is one of those on top, one of those on the bottom. That's called a butterfly, right? So I bought this one first, I bought this one second, and sharing the middle strike. This one cost me 2. This is convert the vert, isn't it? 275 credit. Right? right? So I made $75. And now this butterfly is still open, which means if this is a 5 wide fly, I have the potential of making $500 more on top of the $75 I've already made. Now, what happens if price goes all the way up here out of the butterfly? Nothing. These will all expire in the money and wash. And I have to close the trade. I want to close it because it's in the money. You don't have to close it. Typically, they will settle it for you. So it's good to close it for like no money, like $3, but you don't have to. It will settle, not cash settle, but there will be some settlement. And because Trade With Me Now members don't get charged assignment fees, you can kind of just let it go. But I would close it. What if price drops through the floor here and ends up down here? Well, then all these strikes are out of the money and expires worthless. So I keep the 75. So in other words, I keep the $75 no matter what happens. The best thing that could happen is that price can drop into my net. Now, obviously it's dropped more than that because Tesla's down almost 6%. So it's at 267. But I would imagine we'll probably get a bounce tomorrow. Why? Look, down here near the lower Bollinger, oversold. I think we might get a little bounce. Where do you think we're going to get a bounce to? Don't know. Don't care, right? Already made $75 on the trade, and I have the potential of making up to $500 more if we can get anywhere near the center strike, which is 292.5. That's the target now. And I can just sit on it, and I don't care what happens. Does everybody see? Now, the reason why I chose to do this, and by the way, I sold one of them for $320. So I've already made $120 profit. I made $75 each on the other two, right? So I'm up, should be 370, right? I'm up $370. Gosh, this is really pissing me off here. Right? Net, 370. And I've got one butterfly that can bring in another $500 or 400 or 300 or 200, depending on where it lands, right? So let's look at NVIDIA. So NVIDIA, interesting. So we already had an NVIDIA trade. Those of you that were in the NVIDIA trade, we did a double calendar, I guess is what you could call it. We did a trade up here right before earnings up in the 140 range, and we did another one down here in the 10 whatever range, 108, I think it was, like around here, right? This one, we ended up selling it for like $16 just to get some capital back. It was a very inexpensive trade. Overall, we got $16 back and got out of that one. But that left us with this. What was the calendar? I believe we were short the 108. I think we were short the 108 put for last Friday. And as long as price finished above it, this would expire worthless. And it did. So we kept the credit from the 108 put, the short 108 put. Great. So now what do we have? That was for last week. Last Friday. This Friday, which is the 8th or the 7th? What is it, the 8th? I have no idea. 4, 5, 6, 7th, yeah. For this Friday, we still have the 108 put that survived the calendar, right? So this is what a calendar is. We sell the 108 put for last Friday and buy the 108 put for this Friday. So what does that do? Well, if price is up here at like 120, we think price is going to drop, but not that much before the end of the week, but probably that much the following week. We can sell the 108 put as long as price stays above here. We sell this put and bring in premium price stays above it, this expires worthless, and we get to keep that premium. Yay! And that premium that we keep helps pay for the 108 put for this Friday. Because these were like $280. I didn't want to pay $280 for it. How do you get it to be cheaper? Sell some premium the week before, as long as you can find that level. So we already have this 108 put. The other day it was up like 60%, 70%, which was great, right? We did that. Yeah, I think so too. Yeah, was it 270? 70, and I thought it was 70, 70 and 120. No? Whatever it is. So I thought, well, I think NVIDIA is going to go down even more. I do. It's down now to 113, right? So I added to the NVIDIA trade by doing what? Something pretty similar. So I sold, this time around, I sold the 105 put for this week. And I bought the 105 put for next week. That's my, 105 put for next week. And the whole thing cost me $1.20. So we'll see what happens on that trade. The idea is that price will continue to drop, but it won't go below 105 this week. This will expire, and for a total of 120, instead of paying $280 for a 108 put, I only paid 120. Now I've got two puts on, right? I'm sorry, 105. I got the 105 and the 108. And if price continues to drop, I'm in a great spot. And if not, I paid so little for it anyway. Let's check out Microsoft. Yeah, Microsoft is all these big caps, what's happening right now. So don't believe what you hear. Don't believe the bullshit that you hear in the media, that the reason the stock market is dropping is because of tariffs or something that Trump did. It is not. The reason the market is rolling over is because investors are dumping their stock. And they're not dumping their stock because of tariffs. They're dumping their stock because they've made so much money on the backs of every other trader out in the market. They realize the bubble is about to burst. They're over bloated, and literally they're just taking profits and dumping, and really happy to do so. So don't think for a minute that somebody dumping Microsoft here or here or here is upset. They're not, because they bought Microsoft down here and they've been blowing this thing up for years, for the last couple of years. This stock market that we have right now is overbloated, overvalued, and the big boys are dumping. That's what's happening. Don't let anybody tell you different. Warren Buffett's been dumping stock for the last 7 or 8 or 9 months, while he continues to advertise on every network, oh, buy Berkshire Hathaway. He's dumping his own stock. Oh, but he just bought a bunch of Apple. Bullshit. He's dumping his own stock. Don't believe what you hear. Yeah, so bounce trade for tomorrow. And sorry, Needles, there is not an acronym for the calendar spread. So the way you put it in the tracker is just like in the same way that I do the love triangle. So maybe this is something that Cheryl can do on Thursday in her session, which I think she has already done, is to show you how to put it on one line. You just put it all on one line. So next week's trade is where you put the first trade here, whatever it is, like you buy the put for next week, right? And let's say that put costs $275. But because you're selling the put for, let's say, $1.25, right? $1.25 is you're selling the other put, that's the calendar. What's the net of it? Right? Well, the net is $1.50. So you're going to put a cost, you're going to put a cost of $1.50 in the tracker. And then $1.50 is what your cost will be. And then just put in the notes what you actually did, and it'll all be on one line. So just pick put, because that's what it is. So the trade type is put. And then just do the math so that your net cost of the calendar is here. And in the notes, put, I also sold the 105 put for whatever, netting out $1.50. So you do it all on one. That's the easiest way to do it. Yields are bouncing up today. Long-term raise in bonds because of selling off of the stocks. I don't buy all that. I think there is some optimism. Now remember, tonight is Trump's State of the Union. So between that and oversold, you're going to get a bounce. And everything, the dollar should bounce up, yields will bounce, the markets will, everything kind of will go up together except for the VIX, possibly. I think yields are still going to go lower and lower, but really don't know. I really don't know which way it'll go, which is perfectly fine. I'm trading in the moment, trading the charts in front of me. So when you ask me a question like how far down the market will correct, you could just, the easiest, let me just finish Microsoft and then I'll finish with that last one. That will be the last two questions of the day. So Microsoft, Microsoft is in trouble. So you could certainly, if you wanted to short it here for March or April, I'm perfectly fine with it. It's in trouble and you could. The smarter trade is to wait for the bounce to see if you get any bounce over the next 1, 2, 3, 4, 5, 7 days up to this level here, which is the 20 period simple. Look, boom. That's really where you would, I'd love to see a little bit of a bounce and then a failure and then short some more Microsoft that way. That's typically what I like. But if you said to me, I want to put a position on right now, if you're going to do that, then buy like a 370 butterfly for April or something. Like just put on a really cheap out of the money butterfly to get your toe in the water. And then when it does this and then does this, then you can lean in. If you really feel you must get in now, I think you're fine getting in now. And then the last question, are the liquor prices in St. Thomas still great? No, nothing is great. Yeah, eggs were $19. A jar of almond butter was $53. And the drinks here are between $25 and $30 each. So, no. Inflation has worked its way down here to the islands as well. And so the last question was how low do I think it can go? Let's just take a look at the weekly SPY, because that's really the info, right? How far, what's the next support level on the weekly? Well, you just broke that, didn't you? Right? So where's the next level? Right there. So the next level is 565. That's the next level. And if you look, 567 is the Bollinger. 563 is the 50 period simple. So look at your lower Bollinger and the 50 and the previous swing. That kind of tells you where this thing could go to, but expect a bounce tomorrow.
Thanks for watching. Hope you enjoyed this video from Trade With Me Now. Make sure to go ahead and like this video and subscribe to our channel so you make sure that you catch our next video right when it's released. Also, if you have a question or comment, please leave that in the comment section below. And of course, if you want to learn more about Trade With Me Now or join our community of profitable traders, go to tradewithmenow.com. There's also a link in the description below.